Here's a long-term forecast for the Dow, S&P, NASDAQ, NDX, and SOX. In this video, I'm going to detail my case for a third wave, and I think most eliticians are still siding with Prector and Mister We're gonna crash, and his main buddy is actually I've been mentioning him a lot. I don't care if he gets traffic from my site because I really don't care. Because this guy Dan Eric he gets a lot of traffic from all these bears and a lot of eliticians. But the reason why he has so much traffic is because there are two gigantic bearish sites that are linking to his website. One is Zero Hedge isn't bearish anymore, but they actually became bullish. But Zero Hedge is literally half the traffic to his site, about 3,000 visits, and and Mishedlo, I think that's how you pronounce it. I knew that guy way back in Silicon Investor in 2001, 2002. I remember getting into arguments with this guy, and now he has this really well-populated website. I don't think he remembers me. I'm pretty sure he'll remember me because we had long discussions about the market. And I mean, I really think that you guys should help me get a link into Zero Hedge, have my website replaced by Dan Eric's website because Dan Eric is just a bum. The guy literally started studying Elliott Wave like 2 years ago, and thinks that he's some kind of genius. All he did, he got just get lucky. He just got lucky. The guy basically has like three or four really large bearish websites linking to his website. So if they delink him, he will have no traffic. But the main website is Zero Hedge, which is giving him 3,000 visits a day, and literally half his traffic, 3 or 4,000 visits a day. And the guy is not deserving of any of that because he's. I mean, I consider myself not sane. I'm bipolar, so you guys know my history. I've been pretty flaky. I've flaked out of once or twice in my 10-year trading career. Not completely flaked out, but you know what I mean. But Dan Eric is a complete flake job. I mean, the guy cannot. I mean, let me talk about this guy named that I mentioned in the last video when I talked about the long-term market. The reason why I'm talking about these other eliticians is because I just don't want them to get into trouble because there was this guy in 2003. His handle was Velociraptor. He was on Silicon Investor, and all the bears loved him, and they all followed him like he was a god. And when the market started to rise in 2003 after the wave two correction in the beginning of 2003, people continued to follow him, and they started throwing money at him, and they started this little fund, and I don't know the entire story, but basically every day he'd tell everybody that we're gonna crash every day. He's like, we're gonna crash every single day. He just tell all his bearish disciples that they was gonna crash, and literally the Nasdaq went from I believe 1108 to about 2000. It literally doubled from the point where he started. Actually, it was like 1357 to around 2000 that he told people to short. So it literally rallied 50 to 60% on its call, and he had S&P puts, I believe, either a future contract that are leveraged to the hilt, and poor guy. I mean, I don't want to trash this guy because he's already a dead horse, but um, he kept on shorting over and over again. Thing is the worst thing about Elliott Wave is that I have to admit this it's kind of faith based. You have to have faith in your account, and because it's forecasting, and it's not an easy thing to do. And when you stay on the bear side, I mean, I'm pretty damn good at what I do. I mean, like I said, I consider myself to be one of the top in the world, if not the best in the world, based on my record. I mean, I may not have the traffic of Dan Eric or Zero Hedge or Mishedlo, whatever those guys are. I don't have 10,000 people on my site a day. I have 1,000, 1,200, just a handful of people. but everybody is incredibly intelligent. I mean, my subscribers are very intelligent and wealthy and know what's going on. I mean, I don't have a bunch of bums like like I don't know, like Dan Eric, he has a lot of bums. But anyway, let me go on with the story. I have to mention this story just is simply because it's a contrarian point like of the Elliott wave. So there's this guy was basically a contrarian indicator. So the more sweaty this guy got, and the more he tried to push the market down with his words. He's like, we're gonna crash every day. So he get more exaggerated with his words, so people keep on following him. And so by the end of the move to 2000, he was like in like literally the fund he had. I believe I don't quote me on this, but I believe it lost everything and including it went to negative. So not only did he lose all the money that people like threw at him, um, he went negative, and he you can look it up. I don't remember his full name. All I know is he went by. I called him Mellow Velo, okay, because he is a very eccentric, crazy bear. I'm like Mellow Velo, my main man. I'd call him that because he was just completely insane. But yeah, he got into deep shit. I'm gonna say it, deep shit. And I don't know how he can get out of it. I don't even know if he's still alive. I don't even know. But he went against my call. He was anti Gemex. He's basically the anti of me. And he trash talking me every day, saying, "Oh, there ain't no way. This Gemex guy is a complete lunatic. He's crazy. Don't believe him. I may be crazy, but I'm damn right. I'm right. I'm right a lot, up or down. Okay. I'm not a bullish only politician. But anyway, the new guy on the street, his name is Dan Eric. So if you go on his website, check it out. Okay, I don't care if I drive traffic to his site because he's got plenty of traffic. But his website is danericselliotwaves.blogspot.com. So go there and just read his rantings because he's lost his mind, and I think he's the next Velociraptor. And Proctor, I remember when the middle of the bull market, not the bull market, but the middle of a large move in the beginning of 2000, Elliott Wave International was on the verge of like going under. Like the traffic was just horrible, and I think Proctor should reverse himself immediately. And him and Hochberg, this guy's got to reverse because this is a third wave. And okay, there's my 10-minute rant about other Ellioticians. But yeah, I hope you guys enjoy my video that I made with Proctor going, "We're gonna crash." Okay, here we go. You guys ready? NASDAQ. Basically, we got 5 waves down from the 2007 high, 1, 2, 3, 4, 5. And then we retraced back to the top of the B in a wave 1. Got a wave 2 zigzag, partial zigzag. C wave didn't complete down to the intended target, but we actually held 0.618 and rallied back over 25.20, and now we're starting a third wave. Long-term target for fifth wave, the highest target for a fifth wave would be 2850. That'd be 0.618 times wave 1 plus wave 3. So 2850 is a not only 0.618 times wave 1 plus wave 3, it also happens to be near the 2861 2007 high. And if it breaks through 2861, there is no bearish case anymore. There really is no bearish case. It's like it's a recognition pattern where the 3 of 3 occurs, and you might even gap up, get some really gappy moves to the upside instead of this mellow like rise up, and it'll just get really gappy all of a sudden. It's like 2003, and basically 2061 again is the 2007 high, and it breaks through that, we can get a full third wave. A conservative third wave, which is crazy. Yeah, a conservative third wave is 4,000. That's conservative. But if you take basically a third wave can either be 1.618 times wave 1 or 1.618 times the percentage gain of wave 1. So percentage gain of wave 1 was about 100%. So if we go up 1.6 times that, let me see, 1.6 da 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 da. Let me just double that. We can go up 1.5 times that amount. So the target could be as high as 6,000. I'm not kidding. Because in bull markets, the standard third wave would be 4,000, but in a bull market, a real bull market, uh, the third wave can travel as long as 1.618 times the percentage gain of wave one, which means 6,000 to 6,500. Yes, 6,500 in NASDAQ is possible. Trust me, in bull markets, they don't mess around. This is a bull market. So if you guys don't believe it, just don't. I would turn this video off now because I might scare the crap out of you. Because shorting, can you imagine going short to NASDAQ 6,500? How much debt would you owe? Anyway, yeah, if you read the Elliott Principle book, or I don't want to talk about that book, but if you study Aaron Elliott, what he did, not Proctor, because Proctor did not create the Elliott wave. I repeat, Proctor did not create the Elliott wave. He simply recreated it, rediscovered it, and again recreated it in a book. This is Aaron Elliott's work, and not Proctor. He did not invent the Elliott wave. So he does. So Aaron Elliott is the guy you should follow, like his work. So anyway, again, like I said, the percentage gain it can be 1.618 times the percentage gain of wave one. So conservative target could be as high as 4,000 if we break through 2861, which is a key level, 2861 or 2850, or NASDAQ 6,000 to 6,500, which is clearly the yeah, I know it's insane, but again, bull markets don't mess around. And let me show you the NDX. We're already in a big move already. I was celebrating the break of the 2007 high back in December, and I actually had a video celebrating the two. Like people were like, "Oh, whatever," you know. Yeah, people like or they saw it, they didn't believe it, but this is a big deal in the NDX. The NDX broke through the 2007 high like a couple months ago already. I think it was the beginning of December. It already broke through it, and highest target I'd have for the NDX. I mean, okay, if you believe that, if you have the belief that 100% retracement is a bull market, like I believe it, like I believe it's 100% retracement. Obviously, is the full retracement and some, you know. So 100% retracement is was about 2250 in the NDX, and we're way above that. We're at 2400 right now, and we're well past 100% retracement. So we're clearly in a bull market in the NDX, and at least NDX is a major index. It's a technology index, so it's not like it's like it's crap. It's not like it's meaningless. It has plenty of meaning. It may not be the S&P Dow or Nasdaq themselves, but um, it's a very important index. Anyways, the first target I have for wave three in the NDX would be as high as I believe is 3,800. Let me count this: 1,000, 2,000, 1,600. No, 3,300 would be the conservative target for NDX to the upside. But if it travels 1.618 times the percentage gain, it would probably travel to as high as 3,500, about 4,500 to the upside. 4,500 to 4,800 to the upside. That would be 1.618 times the percentage gain of wave one. So yeah, that's those are two targets I have for the NDX. Again, if you're bearish, turn away. Turn the video off now because you'll think I'm crazy, but I'm not crazy. I'm done. These are real actual targets that I believe could actually happen, and I believe will happen. I need to mention the stocks, by the way. Okay, the semiconductor index has been dead money. I'm talking no one want. This index should not be in a third wave, but it is. As you can see right here, it went from wave one, wave two, wave three. The stock just entered a wave three, and it's actually traveled further than a wave 5 already. A wave 5 would have stopped at 450, and now it's about 475 for the socks. So highest target to have for the socks, I believe would be as high as 700 if it's 1.618 times wave 1, and 1,000 if it's 1.618 times the percentage gain of wave 1. Those are the two targets I have for the socks. But this is a big deal because this should not be happening. I mean, because socks is semiconductors are not were just the deadest stocks of them all, and they've come alive in the third wave, which is crazy. It's not supposed to happen. Take a look like at KLA 10 core and like just the bad semiconductor stocks. This is the third wave in KLA 10 core, which is unbelievable. Wave 1, wave 2, wave 3. I mean, KLA 10 core can get to as high as about, let's see, about 65, 70 in the third wave. Wave 1, wave 2, wave 3. Pattern break wave 1, pattern break wave 3 into a full upper 3 would be high as 65, 70. So this is a wave 1, wave 2, wave 3 in KLA 10 core. I'm talking these are bad stocks. Even AMAT, wave 1, wave 2, wave 3. Not supposed to happen, but we have the third wave pattern break in AMAT. Let's see another one. Does Novell still exist? Oh, Novellis. Wow. Wow. Wave 1, wave 2, wave 3. This is not supposed to happen for Novellis. Not at all. But it's happening. Let's go back a little further than for Novellis and take a look at this. Wow. Novellis. It was the deadest stock of them all. And look at where it is, 40. Guys. So I haven't even looked at the stocks like closely. I just was watching CNBC today, and then I just started noticing the stocks. Isn't that strange? I just didn't care until they started mentioning, oh, the stocks is doing really well this year. I'm like, it is. Novell's is a dead stock. It went from 10 to 40. You can't. You just can't ignore that. And another dead. Okay, I think that the most dead sectors in technology are the semiconductors and the fiber optics. Fiber optics that is actually the worst sector since like the crash in 2000 and 2002. Opticals are not supposed to be alive at all. They should be dead, like forever. They should be like left in the graveyard to rot. But take a look at this. JDC in the face. Look at that. Wave 1, wave 2, kaboom, wave 3. This is a sign, guys. When you have the dead stocks like this, exploding like that, that's a sign. That's a third wave. It's all the boats rising at once. Third waves require that uh, all the boats rise, and this is this is not just a rise. This is a real explosion. And people, JDC Interface is going up for a reason. It went profitable. Can you believe that? Profitable. This terrible company went profitable, and it's not supposed to be even a company. It's supposed to be dead. I mean, literally, look at this. Look where it was. It was at $2. It was like at $0, and it reverse split too. This is not supposed to be alive. Look at Sienna. Sienna's the same thing. Wave 1, wave 2, wave 3. I mean, highest target would be about 45 in the third wave. And then you have stocks like Juniper. Wave 1, wave 2, wave 3. Excuse me. Wave 1, wave 2, wave 3. Give me about 10 seconds aside and to clear my throat. I'll be back. Just taking a break, guys. Smoker's cough. I smoke. Anyway, the Dow. All right. 1 second, guys. The Dow target 1.618 times wave 1 plus wave 3. The most important target right now is 12,550 to 12,600. If you can close above 12,600 in the coming weeks, that would set up a third wave to take out as high as 14,200 for starters. But if this is wave 1, wave 2, wave 3, if you take that 12,600, Highest target I have for the Dow, conservatively, is 17,000. But if it goes 1.618 times the percentage gain of wave one, the highest target I have would be as high as approximately 20,000. No kidding. Wave one, wave two, kaboom, wave three. So you guys got to watch 12,600. And another reason why 12,600 is important is because it's the 0.786 retracement of the drop from 14,200 to 6,500. 0.786 retracement is 12,600, and if we break through that, the only resistance left is 1.00, which is 14,200. So we got to watch 12,600 in the coming weeks. The S&P 0.618 times wave one plus wave three is 1360 or 1350. If we can take out 1360, which is the 0.786 retracement level, instead of a third wave. Third wave could target as high as 1700 to the upside, and and the 1.618 times wave one, the distance a percentage gain of wave one will be as high as 2,000 the S&P. 2,000. Again, 1360 is the 0.786 retracement level. So if we take out the 0.786, the only retracement level left is 1.00, 1570. So break of 1360 could be really large and set up an upper three. The overall picture. Sorry guys. This is a long video, and I have smoker's cough. I had it for a long time, and a lot of reason why my videos are short is because I end up like coughing and gagging because I have this cough which hasn't gone away in like 3 years. Yeah, I was sick for like 6 months in 2007. I think it was 2008 actually, and yeah, I was really sick. I had bronchitis for 6 months, and I couldn't function, and I was off the website for about 6 months, and people were wondering what's going on. I told them it was bronchitis. I had my chronic, not it wasn't chronic bronchitis yet, but hopefully I don't have chronic bronchitis. I don't think it's chronic bronchitis, but I had bronchitis for 6 months, and it forced me to quit smoking. But yeah, I was off the site for about 6 months, but I was really sick. Anyway, back to the video. I'm just rambling. Uh, Overall picture again. Start with the NDX. NDX third is in the third wave, wave one, wave two, wave three. Highest targets would be 3,800 to 4,500 in the NDX approximately. It's hard to get the percentage gain of wave one plus wave three, but excuse me, percentage gain of 1.618 times wave one of the percentage gain of wave one. Approximately, it'd be about 4,800 to the upside NDX. For the NASDAQ, conservative target would be wave one, wave two, wave three, and we break through 2860, which is level to watch. We could rally to as high as 4,000 if it conservatively, and as high as 6,000, 6,500 in the extreme target of the percentage gain of wave one times 1.618 times wave one. High percentage gain, excuse me. The stocks, high target would be wave one, wave two, wave three. Conservative target would be 700. The 1.618 times the percentage gain of wave one would be as high as 1,000, approximately. Well, give or take, plus or minus 1,000. S&P 0.786, 1360. Got to break through that. Break through that, we have a chance of taking out 1575 and set up a third wave to size 1700. That in the most insane target, if it's 1.618 times the percentage gain of wave one, will be as high as 2,000 the S&P. And for the Dow, again, it's got to break 12,600. If we close above 12,600, which is the 0.786 retracement level, we can rally to as high as 17,000 conservatively, and as high as 20,000 or higher, 25,000. Excuse me. Let me give it. Excuse me. Let me try to calculate this. Let's see. 25,000. In any case, the the wave one, that's 1.618 times the percentage gain of wave one, is an extreme target. And it's, even though it may seem insane, just go back to your charts going back to the bull markets in the 80s and 90s, you'll see that I'm not kidding. The percentage gain of the third waves can reach that level. So anyway, to conclude this video, how am I going to conclude this video? All right. So basically, I want you guys to go check out Dan Eric's stuff. I really don't care. All of you, I don't care. Go check it out and just see for yourself. This guy gets 8 to 9,000 visits a day to this website. That's a lot of traffic. I mean, I get 1,000 at most a day, 1,000 or 1,200 a day on my website. Alexa doesn't reflect it yet, but it will. I mean, I just relaunched this website, but my page rank is about 4, which is really strong, and it means that Google approves of what I've been doing. So, yeah, I actually became a Wix pro. I'm actually people actually hiring me to build websites for them too. I mean, I got a lot of free time, so I mean, the market closes at 4 o'clock, so I can do their websites in the evening. But yeah, it's a third wave for me. I mean, I got websites that are doing really well right now. My website's doing pretty well. I mean, I feel it. I feel the third wave, guys. I see it and I feel it. I mean, anything that's left for dead, just I would actually look back at some of the deadest sectors. I mean, the housing sector by itself is probably the last man standing to the downside, and I could actually anticipate an explosive move in the housing sector if this third wave theory works and it actually happens. Um, so if you want to guys look at the deadest sectors you can think of and say maybe I'll buy these really bad companies and see what happens. I'm not saying do it, but it could be fun. I mean, take like 5% of your portfolio and just buy some dead companies and just watch. You know, I would suggest technology because anything that's dead is no longer going to be dead. I mean, Cisco is dead, but anyway, I'm gonna quit rambling. I hope you guys enjoy this video. So basically, third wave ho, guys, and no more. We're gonna crash.